Aaron Kennedy here today with Evan New for Tech Teardown. Here are our headlines for Monday, October 21st. Over the weekend, AT&T announced a nearly $5 billion tower transaction with Crown Castle. What's going on with this deal?
So Crown Castle is going to be buying about 600 towers from AT&T and also leasing another 9,100. For that consideration, AT&T expects to get about $4.85 billion upfront in cash, which is, I think it's a pretty good move. AT&T CEO Randall Stephenson, earlier this year said that whoever ends up buying these towers, if they're in a better tax advantage position, they could probably drive more value. And Crown Castle is in the process of becoming a real estate investment trust, in which case they're going to get some tax advantages, lower their own weighted average cost of capital. So it looks like a win for everyone.
You say it's a win for everyone. AT&T investors have embraced the news today. Shares are up a little bit, but Crown Castle investors apparently prefer to differ, and that stock is suffering today. Is this the reaction you would expect to this news if it's supposedly a win-win?
There's a lot going on for Crown Castle today, in particular. They also reported earnings. The revenue came out a little better than expected. Earnings per share missed, and outlook was also a little soft. In addition to that, Crown Castle also said they're doing a secondary offering in part to finance this deal. And as we know, secondary offerings are dilutive to equity holders. They're selling about 36 million common shares, 7.5 million in convertible preferreds. But also that when you raise equity capital, that also increases your weighted average cost of capital, kind of maybe counteracts some of the benefits they're looking at doing from the REIT. AT&T is definitely a nice win because they're going to raise cash. We know that they are interested in expanding beyond the U.S., and they've been talking about maybe doing that through acquisitions. And plus, they're about to buy Leap Wireless. They're going to need some money for that too.
All right, let's move on to our next headline. Ahead of tomorrow's iPad event, Apple's shares have climbed nearly 3% today after receiving an analyst upgrade from hold to buy. Tell us more about the upgrade, Evan.
So Societe Generale, which I'm probably saying that wrong, has upgraded from hold to buy, increasing price target from 500 to 575. So the research notes point to positive data points about momentum being maintained for the new iPhones in the quarter. I think the analyst is modeling above the street. Let's see, expecting $38 billion in revenue this quarter, gross margin close to 37%, which is pretty much above Apple's guidance for revenue. And I think that if they can really hit these numbers, then it's definitely a good thing for investors.
What do you think about price targets generally? Do you think you can say with any sort of certitude that Apple is worth $575 a share? Bam.
Well, I think price targets are always very susceptible to things because in the way that the street analysts typically come up with these models is they use these discounted cash flow analysis that are very sensitive to a plethora of assumptions. If you get any one of them off by a little bit, it dramatically changes everything, particularly things like your discount rate and where you're forecasting revenue growth. So I always take all price targets with a grain of salt. But at the same time, we haven't seen a lot of analyst optimism around Apple in a long time, so this could be a relief for investor sentiment. Over the past year, we've seen a lot of downgrades, a lot of neutral, a lot of skepticism.
Do you think this warrants a 3% jump though?
Well, I think it's a little bit of a relief, and probably in addition to this upgrade, I think what we're seeing today is a little bit of the buy the rumor, sell the. Apple's very susceptible to buy the rumor, sell the news, and with their event tomorrow, investors could be excited to see what we have in store.
All right, let's move on to the week ahead. There's a lot of new tablets expected to be announced this week. Microsoft is coming out with the Surface 2, Nokia is expected to launch the Lumia branded tablet, and Apple, of course, has its iPad event tomorrow. Let's look at these one at a time. Do you think Microsoft's Surface 2 will do better than its predecessor?
I think that Microsoft is learning a lot as it kind of embarks upon this.
That seems really generous. That seems like a not compliment.
Well, I mean,
learning a lot.
Well, they're really trying to do this devices and services thing in a big way, and it's not something they've done before. So they have a lot to learn in that regard. They recently released Windows 8.1 to address some of the criticism of Windows 8, and now they're doing Surface 2. They've reduced the pricing a little bit. Kind of addressing some of the criticism last year. They're also doing a lot of other things like making it more actually usable in the lap by adding just something as simple as adding another angle to the kickstand. You can actually theoretically use in your lap now. And also, on the spec front, they have an NVIDIA Tegra 4, which is a very powerful processor. They upgraded the display. They're really making some improvements to this product, and they haven't really done so well in the first time around, as we know, with their big write-off last year.
Yeah, so why should Microsoft investors be excited about this, or should they be?
Well, I think that Microsoft is just committing to saying, hey, we're still in it. We're not giving up, even though everyone knows the first generation didn't go so well. We're still in it. We're going to improve our strategy, and hopefully they didn't order too many of these things as they did last year.
Let's move on to Nokia's tablet. So Nokia is having its Nokia World event in Abu Dhabi tomorrow, and they're expected to unveil a Lumia branded tablet. What's the deal here? What do you think about this?
So it's the Lumia 2520, one running Windows RT 8.1, which is notable because every other OEM on the planet has abandoned RT, and Microsoft is the only person still making RT devices. If Nokia comes out with this device and it does indeed, run RT 8.1, then that'll be, someone will be joining Microsoft, and of course Microsoft is trying to buy Nokia's handset division and all the devices.
Right. So is this really meaningful for Nokia since they're basically abandoning ship on that whole division?
I mean, assuming that the deal can close, Nokia investors aren't really going to be too concerned about what happens in this division over the next 6 months, because they're expected to close early next year. But Microsoft is going to care because if, let's say this Lumia device goes crazy and people love the tablet, and at the same time people don't like the Surface, Microsoft, if they can get everything closed and they buy this division, maybe they should rebrand and just consolidate under Lumia, depending on how it does in the market and how consumers receive the device.
Okay, and our final tablet entrant this week is, of course, Apple. The iPads are expected to be unveiled tomorrow. What does the iDevice maker have in store for us?
Pretty much everything's expected at this point. The rumor mill always gives you plenty of heads up on what's coming out. iPad 5 will be similar to the iPad Mini in design, thinner and lighter, kind of the standard Apple playbook.
Are we going to see the fingerprint sensor, do you think?
There's been a lot of conflicting reports. I think it's that part is still very much up in the air. I think there's a case to be made that they will eventually. Whether or not we see it this year.
Do you think we'll see it this year?
I did a week ago, but now the latest stuff is like maybe not. So it's kind of a tricky call because we've been hearing a lot about low yields on these fingerprint sensors. And if there are low yields and Apple has a very limited amount of sensors to go around, they should be allocating those to the iPhone 5S, which is still behind demand, much higher margin product.
Are we going to see any sort of upgrade to the iPad Mini?
Hopefully we'll see iPad Mini with Retina display, but at the same time also been reports of low yields, but I think Apple knows that it's important that it needs to launch it even if they can't get to the supply that they want. It's better to launch it now and get ahead of it as opposed to delaying until early next year when production might be a little bit better and more mature, because the holidays, you don't want to miss it on the holiday shopping season.
I heard some rumors that the iPad Mini might be following in the iPhone 5S footsteps and coming in gold now. Do you think that's likely?
I think they've also been having trouble manufacturing enough gold supplies. We've been hearing a lot of talk about how the gold one is the hardest to come by, and I think that there shouldn't be any other reason, why, as far as yields goes, why that iPad Mini can't come in gold. If Apple thinks it's going to be popular, might as well do it.
All right, let's sort out today's tech gossip in the rumor mill. Investors have been hearing perhaps too much about possible order cuts for Apple's iPhone 5C. Display search is now adding fuel to the fire, but tempering the negativity with some good news as well. What can investors take away from this? So
display search is just the latest to kind of chime in on this rumor that Apple's reducing 5C orders by up to 35%. But the good news is that they're increasing 5S orders by 75%. Now, that's a really big increase in arguably Apple's most important product right now. And it really just shows that there's probably a lot of demand for that high-end product, and Apple's really trying to catch up with it.
Now, just last week, though, we saw the Wall Street Journal report some iPhone supply constraint rumors and then backtrack a little bit. So we've seen that rumors are rumors. How should investors take this particular one?
I think investors should, really generally speaking, with all supply chain rumors, you always want to take them with many grains of salt because they're all just possible data points.
Mountain of salt.
Right, exactly, and it's a possible aspect of the broader picture. You never want to base your entire investment decision based on some supply chain rumor, even though clearly people are, because Apple tends to swing sometimes with these types of rumblings. But also, it's important to remember that, like every OEM, Apple will uses multiple sources for components. Apple also uses a lot of custom components, so they'll sometimes double order and then modify those orders later on the line as the yields improve. So one data point, again, it's only maybe part of the picture, and it's a good thing to kind of consider, but you never want to base everything on it.
So Apple's going to be reporting earnings next week. Is this the sort of information that would possibly be confirmed or denied in their earnings release? Is this something they talk about on the call even?
No, but actually in their 10Q filing, which will come a couple days after they announce, there is a lot of interesting data in their 10Q filings about things like inventory prepayments, third-party manufacturing component commitments. I track these numbers pretty carefully, and that can give you some insight onto some of the actual numbers that are reliable that have to do with Apple's supply chain and what's going on in there.
All right, let's move on to our next rumor. Chrome OS continues to gain traction in the headlines. Google now has Acer, Hewlett-Packard, Samsung, and Lenovo making Chromebooks, not to mention its own high-end Pixel. Now there's evidence of another original equipment manufacturer joining in. Who's the rumored OEM here?
So now we're talking about LG, who has now filed for 3 different Chrome-related trademarks: the Chrome One, Chrome Desk, and Chrome Station. And just hints that LG is looking to pursue Chrome OS devices makes a lot of sense considering LG and Google are particularly close. They have an existing relationship with the Nexus phones, prepared to release the Nexus 5 probably any day now. So this is just another step to take the relationship to the next level.
We've been hearing a lot about Chrome growth. I mean, I just listed all those manufacturers. That's a lot. And it's clear Google's keen on pursuing this branding further. Is there any data that backs this up, that backs up consumer use, that it's being adopted?
So we have seen some information from the market researchers saying that Chromebooks are now the fastest growing segment of the broader PC market, specifically within the US market for budget laptops, $300 and less. Chrome now has a 20-25% market share. So it's definitely gaining traction in, I would say, in its target market, which is the low-end market. We've also seen some data that it's getting picked up by educational institutions, which that low price point helps. And schools don't need as much functionality; they just want a browser, which is what Chrome is. But that being said, there hasn't been a lot of good news on usage. So Chrome still doesn't show up anywhere in terms of actual internet usage statistics from net market share and these other vendors. So not seeing a lot there, but I think it might happen in the long term. It's just starting.
If you're a Google investor, do you like that Google's pursuing this?
I do, because it's just kind of taking the same lessons out of Android, and Android has proven to be a big success. And it's not, maybe not in direct monetary terms, but in terms of mode and just supporting the core advertising business, and that's what Chrome is. I mean, Google's sole purpose in life is to get more people on the internet and to use their services and to sell ads, and Chrome
helps them do it.
Right, and in much the same way that Google kind of disrupted the smartphone industry by having an open source operating system that's mostly free to use. Same thing's happening here, and continues to be a threat to Microsoft. Again, in a very small way, but it's there.
Thanks for breaking it down for investors. That's all for today on Tech Teardown. Do you want to learn more about the stocks we're investing in? Just send an email to tvwar@fool.com and you'll receive our special free report on the $1 trillion battle for your living room. For Evan New, I'm Erin Kennedy, and we'll see you next time.